I think when people really get bitten by inflation, when they really start to feel the sting of it, that's when people are going to rush into this. And I think once it starts to make the mainstream media that, gold is at a new all-time high and every day it's breaking higher, that's when money's going to rush into this, and then it's going to go parabolic like it did before.
This is Kaiser Johnson with Liberty in Finance, and this is the Miles Franklin Weekly Special for May 16th through May 23rd, 2023, while supplies last. This week we feature the silver Krugerrand at $3.99 over spot. For years, the Krugerrand was the most known bullion coin in the world, and in 2017, the South African Mint and Rand Refinery began minting a silver counterpart to the famed gold Krugerrand. The silver Krugerrand bear the Springbok antelope on one side and the portrait of Paul Kruger on the other, and have a face value of 1 rand. They come 25 to a tube, 500 to a monster box, they are IRA eligible and are renowned for recognizability and design. Best of all, they are only $3.99 over spot while supplies last. To order this special or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And with us today, a new guest, Steve Barton from the In It to Win It YouTube channel. Steve, thank you so much for joining us today.
Elijah, thank you for having me on the show.
Well, it's great to have you. I see that from watching your YouTube channel, we have a lot of mutual friends there. So it's great to have you on. I was looking at your analysis, and I definitely wanted to have your analysis of the precious metal markets and the general markets as we're seeing a bit of a pullback here. Your perspective where we are, just generally in the metals markets, because we saw quite a run, and a lot of people were saying, it's not going to pull back from here, but we've seen a pullback. So why do you think we've seen this pullback, and where do we go from here?
Well, what you saw was basically it was a run up, and we actually hit a new all-time high. It was just an intraday thing. It happened over in Asia, and that was simply by traders. So I think it's very natural to have like a triple top like that, and that's exactly what we saw. We saw a pullback, and let me say too that I fully believe that we're going to hit a new all-time high above 2100 this year. But that's just a natural correction in the markets. I think this pullback is actually healthy. I think it's good for us in the long run, and it'll give us a chance to kind of accumulate some more metal before that happens. Because if you're not in gold before it hits a new all-time high, you're going to want to be in it immediately after.
Definitely. If you could share your screen with us, maybe showing us some of the price points you're looking at on, I guess, gold first for the metals markets there.
Okay. So this is the gold chart. This red line up top here is the all-time high. And this is the one that you're talking about that just happened earlier in the month on the 3rd. And this was the Asian market where it just for a hot minute got right up above there. And now we're sitting just below 2000 at around 1980. That's the first support level here is 1980. We broke through that, and now the next support level is going to be 1950. And if you kind of go way out on this, basically the way you read these things is these support lines, when you go back over history and you look at the level of 1950, there's a lot of support around there, right? Well, it's looking to me like we're probably going to break through this 1950 and maybe even hit around 1900. That would line up pretty well with this 150-day moving average, right? And if we go to the monthly chart of gold, it also lines up quite well with the 20 and the 40-month moving average. I'm sorry, not for 1900, but back down to 1850. So this is the level that it could really hit. And honestly, looking at this reversal bar in the monthly, unless we get a shoot up here before the end of the month, I think that's kind of the level that it may actually settle down at. I really hope it doesn't get down below 1900, but if it does, we got a lot of support around 1850, and I think it'll settle in there before we go off to all-time highs.
Now, on a fundamental basis, is there really any reason for metals to be dropping right now? Your perspective on that?
Fundamentally, usually when you have a run up like this, it's very natural for it to come down. I think that honestly, I don't think this really even matters. I think it, if anything, to turn a frown upside down, this should be a gift. This is where we should be buying more. And I just went down to my local coin shop yesterday, and it's funny, when the price of these metals is going down, at least here in America, people buy less. So that's when he's just stocked with a whole bunch of bars and silver coins, and when it's going up, he doesn't have any. So look at this as a gift. Most people buy at the wrong times, and they buy when it's going up, not when it's going down. So I think these next month, 2 months, maybe 3 months is going to be a gift for us. And this is the time of accumulation. This is the time to be buying, because once it gets above this red line, there is no resistance. It's never been done before. So there's nothing holding it back. This red support, or this red resistance line, is extremely strong. So once it breaks through that will be the new support, and there's nothing above it to stop it.
Now, as for silver, what are you seeing there, and what are some price points that you might want to share with our viewers to be looking out for?
This one I am very excited about, and I have a lot more silver than I do gold. But I think, like Andy Scheckman says, eventually we're going to be wanting to be in gold. Maybe once that ratio, gets away from 70 to 1 and normalizes something a little bit more closer to 40 or 30 to 1. But as far as silver, the main levels right here, see, we got the 100 and we got the 150 moving average. It's bounced off of those. That's not a coincidence. But it is looking like a bit of a bearish signal here. See, this red 21 moving average is, unless something else happens, is going to cross over the 50, which is bearish. This white line here is the 10. I don't think most traders use this, but I like to use this because it shows you a little bit quicker of what's happening. Underneath it, we've got the 200, which is the strongest moving average, and that's going to be around $22.50. I fully expect us to hit that. I just had our gold expert on the show a couple days ago, and he actually thinks that there's a chance that this could get back down to 20. I honestly would love to see that happen, because I think that would be another back up the truck moment. When we were hitting down over here, I was screaming to anyone that would listen, now is the time to be buying. The silver was $18. You could find it in some coin shops for $21 or $22 per coin. It was really, really a great accumulation period. So is this one at $20, and hopefully we'll get back down to that. But the real catalyst for silver is going to be when gold breaks above 2,100. Because when that happens, gold moves first and then silver follows. And when it does so at, 2 or 3 times as much. So that'll be really nice. Look at this period as an accumulation period.
Obviously, we can't give financial advice, but as you mentioned, when gold moves, silver typically does, 2 or 3 times what gold does there in either direction. So if you're looking for gold to increase, silver typically will increase more.
Yes. And if we want to leverage this, I'll pull up GDX. I'm sure most of your listeners are familiar with the gold miners ETF. Okay, if we go back over history, now take a look. This is the weekly chart. These little arrows are my entry points. But look at this. Okay, so this price point right here back in 2011 was the height of gold, the last run up, and gold was about $2,000 an ounce. Well, right here, we're at about $2,000 an ounce, but the share price is 32, and over here it was 65. Okay, so that's just a double right there, and we're at the same price point in gold that we were back then. Now look at this. This is an even more leveraged bet. This is junior gold miners ETF. Okay, right here we're at $38 a share. Look at the last time in 2011 when gold ran up, and it was up at 175. That's a 4x move. Right? If you want to leverage these, the safety one, once you get your fear out of the way by getting a physical position in gold and silver through you guys, then you can leverage this with the gold miners. And, I like picking little entry points here, and I think we're coming up on another accumulation point in these miners where we can leverage that bet. And this is the greed bet, right? The physical one, once you get the fear out of the way, then this is the one I believe where we're going to make money. And you do not want to be in the S&P 500. You want to be in precious metals.
It seems so dramatic there that you're looking, the GDX and the GDXJ are so far below the all-time highs there, which what is the reason for that? It seems like if gold is back near all-time highs, then the miners should be as well. What's pushing the miners down right now?
I'm really not sure. I think basically we just need money to move into this sector. I listened to an interview by Joe. What was his name? Joe. He's part of the World Gold Council, and Rick Rule has said that about half of 1% of the people in America have anything in precious metals, and that includes a bet on like one of these, on like GDX or GDXJ. And what he said that it's even less than that. He said it's like 30 basis points. So that means it's less than 1/3 of 1% of people have anything in gold. I think when people really get bitten by inflation, when they really start to feel the sting of it, that's when people are going to rush into this. And I think once it starts to make the mainstream media that, gold is at a new all-time high and every day it's breaking higher, that's when money's going to rush into this, and then it's going to go parabolic like it did before. But right now, it's just not on people's radar. Less than 1 out of 200 Americans have anything, and that's including a bet on something as simple as this. So I think that's basically going to be it. But if we just bring this trend line out, you can see that for the last decade, the price is just a nothing. We need the average American. We need hedge funds. This is a very, very small market, so it's not going to take a whole lot. You just get some hedge funds that make a 1% allocation into this. And the average over the last 30 or 40 years has been about a 1.5 or 2% allocation into this. And right now there's less than 1/3 of 1%.
So Steve, then your perspective on just the general stock market, if we look at the S&P right now, a lot of people have been bearish on it, especially the bad year last year, 2022 for the stock market. Where do you see that right now?
These are the resistance levels that we're looking at. So these white lines indicate 4,200, 4,300, and 4,400. About half the smart people I listen to say it's going down, and the other half say it's going up. So you can take that for what it's worth. We are not in the S&P 500. We're not touching this. We were in it for about 12 years or so. And then once COVID happened, we just got out and moved our money into gold and silver. But as we see it here, it's broken through just slightly today, actually. And it broke through and went all the way up past 4,200. So that's significant. We'll see if it closes the day above there or not. But there is an argument here that this could actually go up to 4,400, possibly even a blow off top. Now, to put this in perspective, fair value right now for the S&P 500 is somewhere around 1,800 or 2,000. That's where it would be kicking off about an 8 or 10% dividend. So we got a long way to go for this thing to go down. I don't want to touch anything in this, but this is a very bullish looking chart. Each of these moving averages, the 21, the 50, the 100, the 150, and the 200, they're all sequentially in order, which is very bullish looking. So I'm a little biased towards the upside right now, to be honest.
I did want to ask you about something that's coming to a head right now with the debt ceiling. Your perspective on the debt ceiling right now and how it might shake markets.
Okay, unless I'm mistaken, I believe this will be the 79th time that this has happened. And the last time we had it, right, this is a dog and pony show. Okay, if they default on this, it comes into question, whether or not the US dollar is going to be the world reserve currency. Other countries have bonds, other countries have treasuries, everyone's invested in these things. And if they don't simply raise the debt ceiling, just like they've done every single time before, that comes into question. I don't think there's any way they're going to risk that. So now personally, for me and in the model portfolio, we have more T-bills than we've ever owned in our life. I'm not worried about it. I look at this as an opportunity because I started doing T-bills maybe 4 or 5 months ago, and the interest rate, on a 4-week treasury was something like 3.9, maybe 4%. It shot up to almost 6 in the last couple of weeks. And I think that's a little bit of the fear trade about the debt ceiling. I'm not concerned about it. I got T-bills. If they're going to default on anything, it's not going to be on bonds. It's not going to be on Social Security. It's not going to be on Medicare. It's going to be, they're going to close national parks. They're going to put some government workers that they deem non-essential on hiatus until they can figure out this dog and pony show. So I'm not concerned about it at all. Keep buying more gold and silver. Keep buying T-bills. T-bills are great right now. You can do it through your brokerage account. You just log on once you learn the software and what buttons to click. Every Tuesday, the auctions open up on Tuesday. Buy them on Tuesday. They mature exactly 4 weeks later. They close on Thursday, and so buy them Tuesday, Wednesday, or Thursday. And just, at least in the model portfolio, we got about 25% cash. And we bet 5% of that every week, and then it matures. And when it matures, so we always have 5% cash that in case a deal comes along, like a junior silver miner or something, then we can bet on that. But then the other 5%, you just keep the juice running. And what you can do is I need to do a video on this, but you can basically ladder it out. So I think we're going to get to a point here where the 4-week T-bills aren't so great, like once they raise the debt ceiling, and it's going to be beneficial to have them a little bit longer. So that what you do is when that 4-week one matures, roll it into an 8-week instead, right? And then the next week, roll it into another 8-week. And then as time goes on, the bet will be the 17-week treasury, and then maybe even higher.
Definitely. And before we let you go, did you have any last thoughts for our viewers, and where can our viewers find you online?
The link will be down in the show notes. If you could do me a favor and just put it to my YouTube channel. Basically, what I do is every week I study anywhere from 30 to 40 hours watching programs like yours, Wealthion, just study on my own on the internet. And then I try to dumb it down into about 10 or 15 minutes. Monday market moves, I'll put it out on the weekend. I interview people such as yourself or Rick Rule, same guys you're talking to. And I put it out on the show, and it's just a process. It's a learning. And I would say, definitely have a position in the physical metals first. And then after that, you can leverage it in the stock market with some of the ones that we talked about today. But thank you, Elijah. This has been a lot of fun.
Fantastic. Thank you so much, Steve. And you have a good day, and God bless.
You too.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.